Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand the latest cues from the D Street. Also help you understand where exactly are opportunities emerging for you as equity investor in the current market setup. We'll also be focusing on options trading in case that's on your mind. What are the concerns that you should be aware of before investing in this space? Joining me on this show today is a very special guest, Mr. Shailendra Bhatnagar joins in, market expert. Welcome, Shail, and thank you so much for taking the time out again. Well, the last time we spoke, you did talk about how you are, contra betting on IT, and IT shares continue to go strong after that even today, and they're taking the lead. Looks like it's going to be a stronger run going forward from here. What else is coming to your mind when we talk about the markets right now?
Yeah, hi Sakshi again. Thank you very much for having me over. As you can see, we are seeing a series of record highs happening across the board. We've discussed the Nifty Auto Index, the Nifty Banking Index. We've seen a very sharp rally that's come into the Nifty FMCG Index, and a whole
Yes.
host of small cap, mid cap, wider indices are headed in record territory, and that's more or less due to very, very heavy participation from our foreign friends who in the month of May invested about 27,800 crores in Indian equities. And
Yeah.
that's the fourth continuation of positive data that's come from foreign investors. So that's a big heads up and a big thumbs up and a big vote of confidence for Indian equities. Apart from that, domestic institutions have already been in a buy mode since December onwards,
Yeah.
and they've put in something like 1,11,000 crores into frontline counters and mid caps and small caps that breathe quality in and out.
Mm-hmm.
The other interesting thing is that people like you and me and everybody who's in the PCR, we invest via the retail format in mutual funds. That amount is now somewhere in the vicinity of 14,000 crore rupees per month,
Yeah.
and all that is adding fuel to fire, and
Yeah.
that's why we see a series of record highs that are coming across the board. I would imagine that the sentiment in the coming months is going to be positive again, because
Okay.
the RBI held on to the interest rates just last week, and if the US Federal Reserve in its meeting on Thursday pauses on interest rate hikes in the US, we
Yeah.
are going to see a fabulous rally. Probably
Okay.
Diwali and Christmas would come in together
Oh,
and
okay.
earlier.
Okay, earlier Diwali, in case the US Fed goes ahead and pushes that pause button as far as the rate cycle is concerned. We've done that twice already. It's all eyes on the US Fed now for the next leg of rally in the markets. We'll discuss more about the markets and more opportunities right there for the cash investors. But the space that's interesting me today is also the options space, and that is because India's options frenzy has actually, risen to a crescendo in the month of May. We've actually seen both the Nifty and Bank Nifty options volumes hitting a record of 5.64 billion contracts. This was when, like you pointed out, Nifty Bank hit a record high. Nifty also approaching its all-time high levels as well. Help our viewers really understand, first up, as to why these kind of volumes are being seen in the month of May, and what's the outlook going forward here.
So, Sakshi, there are two things. One, extreme caution is advised for all people who deal in options, because
Right.
99% of the market, as the recent SEBI report shows, uh, books losses in this particular volatile space.
Yeah.
And I personally trade very little in options. In fact, almost to the nil level. But given the fact that volumes have soared so high, and that's the reason being that a lot of FNO shares have hit record highs. Therefore, participation by default is higher in those counters where you see prices going successively higher, because they act as a beacon for traders and speculators to come in and punt on the price. Given
Yeah.
the fact that volume, the cost of an option relative to the cost of a share is percentage wise very less, that attracts the retail audience into that kind of a market. Little do they know that a lower price tag necessarily does not mean that the option is cheaper.
Okay.
And therein lies the tragedy and the irony and the problem of option trading. People punt in excess of their financial capabilities and end up making huge losses. SEBI has done a fantastic job in trying to curb options trading, especially on the retail side. But as your data speaks, and as is anecdotal evidence, everybody and his uncle is into options trading. And the fact that, on a weekly basis, we also saw the relaunch of Sensex futures
Yeah, yeah.
that has also added to this daily volume. And rest assured, Monday is the only day when we don't have a weekly expiry of a particular index, but the Nifty IT index, I'm sure, will make a comeback. So you'll
Okay.
see uh, uh, a weekly expiry on Monday of the Nifty IT index. On
Okay.
Tuesday, we have Fin Nifty expiry. Wednesday, we have Nifty Mid Cap Select. Thursday, of course, Nifty. And we are shifting the Bank Nifty expiry to Friday. So every day is an expiry day. And that necessarily means that all sorts of people come into the market,
Sure.
trade, and try their luck. This is
Sure.
very, very dangerous.
Yes, it is dangerous, and like you pointed out, the market regulator has been constantly asking brokers to, constantly advise all the inexperienced retail investors on every trade that they incur on the option space as well. If you could list out the broad 3 or 4 key risks that one should be aware of before one gets in here, so that every viewer who is interested in this space thinks twice.
Yeah. So, Sakshi, first things first, if you can stay out, you should. If you're new to this market, it's best not to trade options. I say that with grave responsibility on my end because this is not a market meant for an immature investor. Unless you've seen the market cycle for 3, 4 years, you should not be trading options. Point number one. Two, you must realize, Sakshi, in the last 5 years, we've seen very heavy automation happening in the world of options. That means a lot of very high co-location servers who are running on algos, they spot the trade much earlier than a retail investor like you and me does.
Yeah.
And by the time you get into the trade, the meat of the matter is over, and you're held. You buy an option at a very high premium, which you ideally should not.
Okay.
As you can see, if you look at India VIX, it used to be 22, 23 just about 2 years ago. At the moment, India VIX is trading at 11.28 at a time when the market is at a record high. So,
Yeah.
what has happened is the volatility that you see in options trading has been
Yeah.
sucked out by all machines, all algos. And this comes at a time when retail participation is rising. So the reason for the loss that retail investors are making in options trading is because they are up against machines. Machines are fast, they have no emotion, and they execute a trade in 1/10 of a nanosecond. So
Correct.
you have to be very clear in your mind what needs to be done. And you cannot fight a machine unless you join the machine and you install an options trading software at your end.
Okay.
Thirdly, you need to study options. The lower price point that you see in the case of a Nifty call or a Nifty put vis-a-vis the Nifty is not actually an attractive or a lower price point. Even if the option is priced at 2 or 3% of the actual underlying, it might be expensive. So, what people do is they unnecessarily compare the price of an option to the price of the underlying, the Nifty
Correct.
or the Bank Nifty. And
Correct.
they say that 500 रुपए का बैंक निफ्टी का ऑप्शन मिल रहा है, बैंक निफ्टी is 44,000, ये तो सस्ता है. Little knowing that the actual value of an option at that point of time is probably 350. It's
Okay.
available to you at 500 because of excessive retail speculation, and it is
And
the
transaction costs
uh,
also, I believe, right, Shell?
yes, absolutely. So that is what I was coming to. I think option pricing is a deeper subject than the Pacific Ocean, and a lot of study needs to be done before you get into an options trade. Sadly, in the Indian environment, you can open an options trading account online in less than 15 minutes, put in money on your from your bank into the trading account, and you can begin. That is also, there is no hurdle rate. There is no stopping you from making that, from losing that kind of money. So it's a very dangerous exercise, and even people like me, we are very, 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 very cautious on options. Whatever positions that we take on the options market are hedged with a different
Yeah.
option. So
Yeah.
our level of losses are lesser. And
I was actually
finally,
coming to the hedge point also. Yeah, you may continue and then I will talk to you about it.
okay, let's discuss the hedge a little later. The other part is that the transaction costs are so high these days. People don't realize every time you trade an option, you pay the government via STT. You pay a transaction cost which is 20 rupees, 10 rupees, 7 rupees per trade. Either way, it is the cost is phenomenal. I have personally seen people paying 3 lakh, 4 lakh rupees a month as brokerage and government costs. And that eats into your actual uh, portfolio. That is money that's taken away from you. And God forbid if you made a loss that month or that week or that particular day, it's an additional hit on your psychology of that particular day. कि एक तो नुकसान हो गया,
Correct.
दूसरा हमने इतना टैक्स भर दिया, और तीसरा जो हमारा मानसिक संतुलन है वो टूट
Hmm.
गया.
That's true.
तो ऐसा नहीं है कि बाजार में सिर्फ ऑप्शंस का ही काम है. हालांकि 95 to 99 to 100% of trading volumes are almost from options these days. What to do? That's a fact of life that we have to live with. But it's as if that people presume that we have to be in the markets and we have to trade options only. Nothing could be further away from truth, Sakshi.
Right. So, Shell, I was talking to you about hedging. What would you really advise in case one still wants to go ahead and, participate in this
Okay.
space? What is the best way to hedge your positions and be on the safer side?
So, Sakshi, typically, that's also the reason for higher volumes, because if you take a hedge position, you are taking a opposite position from your thought process and adding to the volume. You get my
Yeah.
point?
Yeah.
Suppose you're going long on the Nifty. What you do is you buy Nifty futures, but you also do a covered call, maybe sell a call.
Correct.
That's adding to the volume. Correct?
Hmm. Yeah.
So a hedge is protection. So typically what people do is, suppose they feel that the market is going up. So they will buy a Nifty or a Bank Nifty or a stock future to to capture that rise. Correct?
That's true.
At the same time, you never know that the market may go against you. So they
Absolutely.
take a reverse position on the option side to hedge that. So
Right.
it's basically a safety net. You are trying from a 18-story building. The Nifty is at 18,000. So
Yeah.
imagine you are on the top of the 18th floor and you take a leap of faith, hoping that you'll reach the 19th floor. But Newton's gravity pulls you down, and that is where the option hedge is. You
Okay.
buy a put or you sell a call along with the long future. So at that point of time, when you're falling down, the option acts as a hedge,
Safety net.
a safety net. It protects you from making more losses. If you lose 200 points on the Nifty, your futures transaction will be 17,800 minus 18,000 into number of lots,
Yeah.
right? But the cost of a put at that point of time could be 40 rupees, which may rise to 60 rupees. So you make a lesser loss. Ideally, in the real world, when options were launched, they were a hedge. Sadly, people have now gone into the market of just that hedge and playing that in a very serious manner. And
Correct.
that's a very, very dangerous thing.
Hmm. So, Shell, who would you really advise should actually be is the right person to invest in options? I mean, if not a fresher, then who should be going ahead and taking that plunge here?
So, Sakshi, you can't invest in options because they are trading in instruments. You see, they, a Nifty option expires in a week.
Week.
It
Right.
starts on Friday, ends on Thursday. Correct?
Correct.
In 1 year
That's right.
from now, you will have daily option expiry.
Oh, okay.
Buy in the morning, Tata at 3:30. So,
Okay.
uh, so people should be very, very aware of Greeks. The time value of an option is probably the least understood and least appreciated part, which is theta decay, which means the option has a limited life, and every day that life gets sucked out in the form of price fall uh, from Friday to Monday. Suppose you
Correct.
buy a weekly option on the Nifty on Friday. The same option on Monday morning will be priced lower, even if the Nifty opens at the same price, because 2 days of price and time decay will be sucked up.
Yes.
Similarly, on Thursday, the price of the option will decline very sharply because it's the last day of that option, and it burns brightest. The lamp burns brightest before dying. So
Got
that
that.
is the reason why you see this mad frenzy on every weekly expiry. Now, uh, go back in time and realize that every day there is an index expiring.
Yeah.
So this madness and frenzy is on financial Nifty on Tuesday, mid cap select on Wednesday, Nifty on Thursday, and Bank Nifty on Friday. And just imagine if you would have weekly stock option expiry as well, which is
Yeah.
coming.
Yeah.
Definitely.
Yeah.
So for the world of options traders, limited people like me, but there are many who do a fantastic job. For them, uh, there could not be a better market than India
Okay.
because there is so much to speculate on, provided you know what you're doing. The sad part
Right.
actually is that 99% of the people don't know what they're doing.
Absolutely, 99% don't know, and that is why we are seeing more losses for the retail investors than they have been making profits in this space as well. Also, because of a whole lot of
Yes,
issues of over leveraging that they get into, insurance on these kind of spaces as well.
yes.
Those are the other factor concerns. But like you pointed out, a year from now on, it could be as fast as a daily kind of a transaction that one will have to keep a watch on. What could be the role of the regulator here? You said that SEBI has been doing fantastic work right now to aware the retail investors. Going forward, do we need any stricter norms over here to protect the losses from the retail investor side?
I think SEBI's done a phenomenal job now when you enter a trade on the option side. As you would know, everybody's punting on their own. You don't call in a trade any longer on the option side. So you have a keyboard in front of you, just like I have across me, and then you just punch in your trade. So every time you punch in your trade, the brokers now display as per SEBI mandate, saying that this 9 out of 10 such trades could end into a loss. So
Right.
that's something that makes you pause and think.
Correct.
So one is that, and I am so sure that in the next 1 year, between say May 2023 and 2024, when we again discuss this topic, and we'll be discussing this very often, you'll see about 3x the volume that you're talking about today.
Oh,
Yes,
so
because you'll have daily options.
yeah.
You'll have more indices being added to the uh, futures and indices side. You'll
Yes.
have stock futures which are liquid, will have weekly expiries. So the it's sky high. I think SEBI has done a yeoman's service in protecting investor interest. You've seen over the last 2 years or so, margin facilities have been tweaked. You just can't sell an option unless you put in that much amount in your bank account. So that's been made very difficult. You can't buy an option unless you have that much of cash in your bank account. So, in your bank account and trading account. So, all those stricter guidelines and market interface
Yeah.
in terms of curtailing risk are in place. But what do? There are people who just want to come in the morning with 20,000 rupees, try
Sure.
their luck, and they say कि भाई ठीक है बना बना नहीं बना कोई बात नहीं हमने 20,000 रुपए
जी.
का सट्टा कर लिया आप
Bilkul. You are right over there, Shell. But like, of course, we understand, and all the viewers, I hope they have understood the risks of it before you actually take that plunge here. There are lots of other opportunities that also exist in the cash market in case you're a fresh retail investor. You want to take that plunge, perhaps that or a beginning in mutual funds could be the best way. Shell has been
yes.
advocating that on our shows as well. So, Shell, help all our first time viewers today that, in case not options, which you've been advising against right now, what is the best way to begin their investments in equities?
So, Sakshi, one, you have to be in the equity markets for two reasons. In the longer term, equities are the best that we have in terms of beating inflation and giving you a fantastic retirement box. So, the fact is that you have to invest uh, a large percentage of your liquid asset into equities. The earlier you start, the better it is. Uh, Maybe on the day you are born, if your parents are sensible, and
Okay.
definitely, yes, and definitely on the first paycheck that you get,
Yeah.
you have to put 33% of your money into a good equity fund before you spend a single rupee. So
That's a one.
33% goes into tax, 33% goes into equities, and 33 you spend. No problem.
That's
Now
wonderfully put.
what? Now what to do? Where to put in that money?
Yeah.
For the first 2 years or 24 months of your life in the markets, stick to a good equity diversified fund, preferably a hybrid fund, where 65% of the money is in equity and
Yeah.
35%
Is
is
in
in
debt.
debt. So that gives you a cushion. And the good part is, Sakshi, that interest rates will now fall. We've seen two credit policies where the government has said, the RBI has said, uh, there's a pause on rates. Now
Yeah.
rates will fall. So debt outperforms in a falling interest rate environment. So if you go
Okay.
into a hybrid fund, and if you are listening to Sakshi and you have a paycheck coming in, please buy a quality hybrid fund as your first step into the market. Then add a blue chip fund and add a mid cap fund. If
Okay.
you have money spare, add an international fund. If you do these four funds, Sakshi, you need to do nothing in life. You just have to concentrate on your job and keep on getting that 33% to rise, which means
Okay.
next year, if you get a 15% rise in your salary, your SIP rises by that equal amount.
Okay.
So if you're doing a 3,000 rupee SIP, the next year SIP will be of 3,500. That's a 16% rise in the SIP price. Once you do that for 2 years, Sakshi, people will realize that making money in the market is so simple,
Yeah.
because you will see a kick up happening. You will see debt outperforming because interest rates are rising. You
Yeah.
will see a very smart rally happening on overseas markets because the US Fed will also pause, right?
That's right.
So,
That's right.
and the beauty of this is that if you sit in front of a computer and you put in your Jandhan, your Aadhaar card and your KYC, believe me, Sakshi, you can do four SIPs in less than 10 minutes online. Go through the
Yeah.
direct route, choose a growth option, and choose these four funds. This is the first step. After
Okay.
24 months
Yeah.
are passed, then you might want to look at individual equities. And in India, there are about 150, 160 companies which should be a part of your portfolio over the long run.
Okay.
Buy what is in pain. When I tell you that I like Infosys at this level,
Yeah.
it is
Yeah.
because it is trading at a very crisis point in its life. It was 1900, it's now 2800. Sorry. 12,
Sure.
1280, 1290.
Yeah.
So all you have to do is master the art of buying distressed stocks because of an event, not because the company is bad or their
Yeah.
balance sheet is not good. And that's
Right.
the only thing you have to do. If you don't do options, you will save a lot of money by not incurring losses. Options is a different part. We'll do it some other day.
Yeah.
It's not as if that you only lose money in the markets in the options. Certainly you make money, but there is only a certain time frame during the day or during the week when you should be buying an option and taking advantage of the momentum that is there.
Okay.
But
Okay.
making money in the markets is very easy.
Hmm.
Just start with a simple SIP. Stick to it for 2 3 years. I understand people in your age group, Sakshi, they have little or no patience. That's
Yeah.
okay. You will lose money otherwise. Markets are a place where the money is transferred from the impatient to the patient.
That's right. That's right. That's wonderfully put, Shell. In fact, I mean, like, that's the best mantra that all the first time viewers can actually get. Start off, if not earlier, I mean, like, your parents should start off just when you're born. And if not that, at least when you get your first paycheck, don't spend even a single rupee. 33% goes into that SIP, then into your investments, and then the remaining 30% is what all you get for spending 2 years consecutive. And, 4 funds, he's told you, varieties of funds to get started with, including hybrid, a blue chip fund, of course, an international as well, in case you go ahead, and the mid cap fund as well. That's what I've got. That's a wonderful advice, and that's easy to make money in markets. That's going to be something that we will discuss going forward also with you, Shell. How to make easy money in markets. That's something that all our viewers are interested in. Well, many thanks, Shell, for being with us on this show. We've discussed a variety of topics. I hope all the variety of traders and investors got something to take from this show as well. With that, we wrap up this special edition, but don't go anywhere. Stay tuned on to Business Today TV, as closing hours just comes next on our Market Today. So do stay tuned onto for that as well.
If you like the video, do like, comment, share and subscribe.